All right, so I wanted to try to get this video out sooner, but I was pretty sick. My voice was not doing well at all. So unfortunately, I'm getting it out later than sooner, and it is what it is. But here's my Topstep dashboard showing my live account. So right now I'm still at 85% winning days with 40 days complete. So that's a pretty good metric with lots of trades in there. I've fallen down to 66% winning trades. Do not like that very much. I'd like this to stay above 75%, and I'll just have to grow that, back up there. Average winning trade $205, average losing trade $297, and this is a problem that we're going to talk about. Why this is it's lopsided the way it is. Yes, I got off to a rough start. Yes, I've hit max loss twice in this account, I think. So that doesn't help right here. But still, there's an underlying problem there that we're going to talk about. The current balance of my account is at $8,211. My account high was $12,158. That does not mean I've lost almost $4,000. I did take payouts. So when you take payouts with Topstep, they still follow your account high. So if I had $50,000 in my account and then I took a $25,000 payout, my current would show $25,000. And my high would show 50,000 up here. So this, you can't just say this minus this, that person must have lost that much money, because there could be, if there's payouts in there, that will affect these numbers. And it's not just about one payout, 5 payouts later, this doesn't look like you ever took a payout, and this reflects it down here. So that doesn't help a whole lot right there. But I did have a drawdown though. My account is down to $8,200. I should be around 10,000 and change right now, 11,000. So not good, not terrible, but not good. All right, so let me show you those trades. Okay, looking to get into the YM to the long side in my live account, just with one contract. Should be about a $500 risk reward. All right, jumping in.
Order filled.
So in the trade with one contract, if it does want to come back down towards the bottom here, I'll add to my position. So I build my position closer to risk if it does want to come back down here. All right, so trades in, looking for a target up in here. Okay, this 5-minute candle is about to close. I'm getting here close to risk. I'm going to go ahead and add one more contract.
Order filled.
Okay, I should have probably waited for a retracement to go on the way up, but I buy that right there. It's tempting. So barely surviving this trade, but so far hanging in there. Okay, there we go. Stopped out of that trade for $800 loss, and I could jump in, but I can also speed bump it here with 2 contracts. Okay, so I wish I would have speed bumped this trade right here. I'd already be recovered pretty nicely actually with 2 contracts. Let me go back to the 5-minute.
Order filled.
Okay, now I'm in short, 2 contracts. Probably should have skipped these trades altogether, being so close to end of day. But because, I went against the proven statistical probability and went with all this stuff you hear on the internet. Why are you getting in right up by support? You should wait till it breaks the support or breaks resistance, before you get into that trade. Like all those things. I went with the normal rules of trading, and that's why I'm losing right now. If I just went with my probabilities and my plan, I would have recovered today and would be green actually, instead of taking potentially a $2,000 red day in the live account, which is pretty significant. Could just be retracing this. Let's go look at the 30-minute. Maybe I'll get lucky. Or maybe now that this is sold, retraced half, we see a sell-off in it. Yeah, it's going to be one of those days. Looks like I'm going to hit a nice $2,000 red day. And I screwed up the speed bump, so it should have been a green trade altogether. So in a way, this is a casino trade I'm in, because I should have got short right here, not down here. And if I had done that, like I said, everything would have been good. All right, so here we go. $2,000 red day. Is that what it's going to be? 1900.
Order filled.
Okay, so out $1,900 red day. That's a huge downer in the live account. And it's really just because I traded poorly. All right, everybody. See you on the next trade. Next week, I'll recover this. Okay, just jumped into the YM to the long side. On the 30-minute chart, you can see where that channel was. Very clear. Breaking out of that channel. But you also have this kind of a cup and handle right there that looks pretty awesome. So this move could be generating enough energy to actually eventually work its way all the way back up here. Back in the 5-minute, there's my target, that green right there. That's my minimum target. So I got to trail a stop once it starts going past that. and then from there I'll just kind of let it run. We'll see how far it goes. Okay, so good news. It's retracing, and I'm in the simulator again. Man, now I can get back in. 4 contracts at a big discount. Right back at that support area. I said I was hoping it would come back to this area, and now I'm gonna
Order
buy my
filled.
4 contracts coming as it comes back to test support. I am now in, but I'm not in with an ATM strategy, which is unfortunate. All right, so sell stop market.
Order submitted.
Okay, there we go. So 4 contracts in the YM Dow Jones. So the long side on what is today? Today is the 13th, June 13th. Looking for this target right here with a potential for a move all the way up here. Okay, so this trade's still going. I'm gonna go take this trade off the table here. We got 4 contracts. Gonna move it to the 1-minute candle, and I'll show you why in a second. Choppy on the 1-minute candle. Got 7 minutes left. All right, let's just close it.
Order filled.
Okay, so right now I'm in the live account with the YM. Have a really awesome setup taking place here. If it confirms, it's like a 90% possibility for success. So I'm going to go big on this trade. Feel good about it because of the really high probability. So we're looking to risk around $800 on this this trade to the short side. 3, 2, 1.
Order filled.
All right, in the trade, buy stop market.
Order submitted.
Okay, so short the YM, 4 contracts, looking for a move down to 38449, and then should be easy slide down to this next spot. And yes, definitely went heavy on this one because the probability is so high. Okay, about to get stopped out for a $1,400 loss on like a 90% probability. That's just insane. But that's been my week with the live account, so definitely taking a beating here. I'll take my stop out. Going to the weekend red like I do not want to do. I should have took half off when it was right here, right? All right, there we go. Stopped out of that trade. So that's going to be almost a $1,500 hit on the day, bringing my account down to $8,211. All right, so now you're kind of caught up with the live account. But what you've been hearing me say over the last several videos and in the videos I just showed you is a lot of different things. Like you hear me breaking my rules. You hear me not finishing a trade to the proper end, right? To the stop or to the target. You saw me pull that trade off. You hear me keep saying, I wish I could have, probably should have, maybe it will. I hope it does. I should have, maybe I will get lucky. You hear me keep saying, I don't know, or I screwed up, or I'm looking. And then you hear me like hunting the charts, looking for confirmation bias. You hear me talking about my P&L in several of my trades, over the last several weeks, constantly looking at that and making decisions based on it. You hear me lacking confidence in my trade decisions when I get into them. You've heard me keep saying, I screwed up. That was a casino trade. I took a casino trade. I shouldn't have casino traded. I traded poorly. You've heard me say that I feel paralyzed and I'm experiencing trader paralysis. You hear me say, what am I doing, right? That's been a few times in there. I keep saying, I wish I coulda, woulda, if I had. I keep on, making mistakes. You keep hearing me make mistakes like, oh, I'm in the sim again, or I thought I was in my sim and now I'm in my real account. So you've been hearing a lot of those different things. And all of those things that you've been hearing and seeing say mental fitness degradation, right? My mental fitness is down. And even more important, it all points to a flaw in my trade plan, really, is what it all boils down to. So what all of you have been seeing and hearing is a flaw in my trade plan. But I want to give you a rundown basically on my take on trading first so you can better understand where I'm coming from. So first, what is the correct way to trade? What is that correct way? Because everybody has an opinion out there, right? You're watching other channels. They all have opinions, comments, people in the comments. You see it all the time, all day long on everybody's channels. Everybody has their opinions of what you should and shouldn't do trading. So I'm going to make it very simple for all of you who are new to trading and for those of you who are struggling. The correct way to trade is the way that works for you. It's that simple. The correct way to trade is the way that works for you. Forget about all the noise on the internet that you see. Like you have to have a risk reward of risking 1 to make 2 or risking 1 to make 3. You need to have a specific win rate. You need to have tight stops. You need to be more disciplined. All these things that you're going to hear on and on and on. None of that matters. The only thing that matters is you do what works for you. You trade you, not them. And what works for you is the right way, even if it means that you're breaking every rule in the trading book. So with that said, here's what's important to my trading. So the first thing is I need to have a trade plan that fits my PLG, my personality, my lifestyle, and my goals. So there's a lot of information that goes behind each one of those things. I'm just going to touch on the first one, which is the most important one, really. And that's a trade plan that fits my personality. And it's not just my personality, it's my trading personality. So one aspect of your trading personality is how life events can affect your emotional fitness. So emotional fitness is a big part of that trading personality. So life events, stress, all these things can affect your everyday life. But trading already requires such a high degree of mental, emotional fitness that even a slight degradation due to any kind of like external factors can make a huge impact. There are symptoms that will tell you that, like, do you find yourself hunting for confirmation bias? That's a big symptom. If you start looking for a justification to do what you want to do, if you can recognize that should be a big red flag for you. Like, hold on a second. Why am I looking for confirmation bias? Why am I utilizing a subjective viewpoint to do the thing that I want to do when I probably shouldn't be doing it, right? I'm trading for money right now. The other thing is trading your P&L. Are you looking at that P&L? Do you find yourself constantly looking at that thing? If you are, there's something else going on there. Your emotional fitness may be degraded to the point that you're going to be ineffective with your current trade plan and strategy. And you need to, if you can recognize that, then you can make that adjustment and, hopefully not hurt your account too bad that day. Okay, so one of the most important components of my trade plan that really makes or breaks me is my ability to have proper risk management. So and I think there's two options there. It's risk management through position sizing or risk management by putting your stop at a location based on the max risk per trade. So let's look at a chart real quick. For my system to be successful, for me to be successful, is I need to be able to have strategies that I can look at the chart before I get into the trade and say, that's where my stop is, that's where my entry is, what's the spread on that? It's $6. 6 times 20 for the NQ is $120. Where does that fall into my scaling ladder? How many contracts should I buy? Can I even take the trade, or should I go to the micros? I need that to be successful. So, and that is the way I call that risk management, is when you have risk management through position sizing. Then the other risk management is risk management through the position of your stop, not your size. So, and that's by when you look at the trade, you probably get into it not even knowing where your stop is. And you just say, okay, I'm in this trade. I don't want to lose more than $120. Where do I got to put my stop? I'll put it right there, and then we'll see what happens. All right, so the next thing I need to be successful is I need to trade on a proven statistical probability of success. And basically what that means is that a thing happens, and when this thing happens, what are the probabilities that it's going to do the next thing? And then what is that based on? Is that based on every trade Monday through Friday? Is that based on Monday and Wednesday? Is that only with the NQ? Is that the YM? What is that? What are all the parameters that go around that? And am I getting a big enough aggregate to determine that? If I'm just looking at 10 trades, it's easy to have an 80% success on most things. But when you look at 100 trades, 100, especially when you start going back like 90 trading days, almost 5 months of trading, where all different kind of market conditions are present, from news events to options expirations, holidays, all kinds of things are mixed into that 90 days. Then what is that probability? So when you compile all that stuff, what is the true statistical probability of success with those trades? If I don't have that, that's a casino trade. Now I could trade based on discretion from looking at charts for years and years and years, and I might have good trading instincts and all those things. And I may be able to be a successful trader that way. But to me, all those things are casino trades. The only time it's not a casino trade is when I'm trading solely based on a proven statistical probability. Okay, so this is my back test blocks, and this is what I also use to track my trades. So I have my little bar here where I put all my rules, put my rules in there, what's going on, kind of thing. And then I have all my trades. I can do this by trade. I can set it up by day to see if my day is different than my trade. Like, for example, if you're looking for a 2-to-1 or one, you want to risk 1 to make 2 on your trades intraday, great. What does your day actually look like? Are you risking 1 to make 2 at the end of the day, right? Am I losing $500 on a red day to make $1,000 or $1,500 on a green day? Because that also plays into effect. Or am I losing $3,000 on a red day to make $500 on a green day? Because that's a whole lot of green days I need now to make up for that one red day. So something to think about, traders. Don't just look at it from a per trade basis, but also look at it on a daily basis. Having a written down setup to where you can look at and see your real probabilities and it's written definitely will help a lot be able to determine whether or not it's actually a high probability trade, or is it really like 22%, or is it really 79%. By putting all this in here, I can see that if I have 2 red trades, chances are that next trade is going to be a green trade. In 90 days I've never had 3 red trades in a row. So now when I have two red trades, I could say, you know what, I'm going to scale up on that third one because the probability is way in my favor. And then from there, I go back down to normal setup. And then when I get 2 red trades again, I scale up again, which is what you saw in that one video. I scaled up because I normally don't have 4 red days in a row for those opening trades. So I'm scaling up in it. And then I took a gigantic hit because that one showed up that day. So nothing is a guarantee. We can only trade on probabilities. There are no guarantees in the market. So when I find myself struggling to do what I need to do to be successful, or if I recognize that I'm hunting my P&L or looking for confirmation bias, I might do these things and not even realize that I'm doing it. But once I do realize that I'm doing it, then I look back at my trade plan and say, is everything right with my trade plan? That's the first place I go. I don't look at my strategy. I know a lot of traders are quick to dump their strategies if things are coming off the rails. But the first place I look is my trade plan. And then if my trade plan is solid, then I look and see, does my strategy fit my trade plan? Because there may be an issue there. But my trade plan will tell me a lot. Like, it takes time to grow an account, and it seems like it only takes a moment to give it all away. Okay, so I got 2 more pieces to cover before I get to the point, if you will. But I think these pieces are important because you need to understand the psychology behind how I got there and what it actually means for my account. And if you find yourself in a similar position, what does it actually mean for your account long term? So we're going to look at success right here. I'm going to do a longer video because I know there's been a lot of comments on other people's channels and also even in my chat about success rate. What's more important, having risking 1 to make 2, or having an 80% success with a 1-to-1, or maybe a 95% success by risking 2 to make 1. What's more important? So we're going to go into a longer video about that later. But here's a quick little high-level overview of success rate. And if you have not done this yet for your strategy and your trade plan, I would recommend you do this exercise. Pull up your PowerPoint, make your blocks like this, or however you want to do it visually for you, and kind of run through it to see what it actually means to your plan and your strategy and what's really likely to happen to you. Again, it's easy to think about it, but I believe your brain, or my brain anyway, plays tricks on me unless I actually visualize it and see it and then talk about the reality. So this is how we start, traders, with a 70% win rate with risking 1 to make 1. Start there, and you can redo this to however that RR is for you. We have 10 blocks here. So out of 10 trades with a 70% win rate, I would expect to have 3 losers and 7 winners. You look at that and you're like, wow, this is pretty good, right? If each one of these was $100, I'm risking 300 for the week, and I'm potentially going to make 700. Great, I'm going to make $700 this week. That's what our brain instantly thinks. At least mine does. But that's not the reality. Let's look at the reality. This is not even the reality, but we're one step closer to reality. Whereas if I had 3 losers, my winners need to pay for those losers. One thing with risk reward that I found is that if you are looking for like a 2, risking 1 to make 2 or risking 1 to make 3, the probability goes down. So instead of having a 70% win rate, it might be a 50% win rate or a 40% win rate. And when I do this bigger video on this whole thing, I think you're going to find that it ends up being kind of a wash in a lot of different ways in the end. And it's not about, making that much more money in one way or the other. It's more about how your brain works and what you need to be successful. So these winners paid for these losers. So now I'm left with 4. But that's really not the reality of trading because we're humans. Reality is on one of my trades, I might not make my full target. I might get out early for whatever the reason might be. I'm looking at my P&L, I get scared and I'm out. Market conditions change and I'm out. Or maybe I stayed in and hit the target, then it started to go against me and I got out, right? I moved my stop to break even plus a couple dollars and I got out. So assuming that every time that I've done that, I still captured at least 25 to 30% of what that trade was and I didn't give it all away. Now you can see what my week is starting to look like. And that's if I only do that one time. One time out of 10 trades, if I do that, that's what it looks like. But is that the reality? Probably not. Reality is more like this, where I had my winners pay for my losers. On a couple trades, I didn't get my full target on it. I let it go back against me and I got out for a loss or even, a small profit. Or I just took my trade off the table. Sometimes I'll make a little bit more. And if you wash those two things out, as long as I make 25 to 30% of what those profit targets were, say if it's $100, I made 25 and 25 here. This is what ends up being more like the reality. And for a better visual, if I combine those two, this is kind of what we're looking at. Okay, so then you end up with this, right? But is that the reality? Pretty close, probably. But they're still missing one piece that typically happens. And that's this. What is my probabilities based on? My 70% win rate, what is that based on? Every available trade. Am I going to take every available trade or will I miss one? Right? I went to grab lunch. I went to do something. The trade set up and I didn't take it. Whatever it might be. I didn't take that one trade that week. Only missed one. This is more like the reality right here. So what does that translate to as far as your account and the psychology aspect of trading? Well, if you expected to see this at the end of the week, where each one, you lost 300 and you made 700, and then the reality kicks in that you actually started your week risking $1,000 to only make $175, and you didn't expect it, then it's like, oh, my strategy is terrible. I need a new strategy. How did I only make $175 that week? I could have lost $1,000. I basically risked 8 to make 1.75. Is that right? Right? Imagine that, traders. I said, hey, you should try to risk 5 to make 2, or you should risk 8 to make 2. Risk 800 to make 200. That's what you should do. You'll be like, are you out of your mind? But in the reality, with a 70% success rate, when we start our week out of 10 trades, we're risking $1,000 to make $175. That's the reality because of what I just laid out for you, right? Your winners pay for your losers. So that's all you're going to take home. And then 2 trades, you jumped out a little early, or they went again, you hit the target and came back down. So you didn't get the full hit on it. You missed a trade out of those 10 trades. What are you left with? Not $100 here. Maybe $75 is what I'm left with. So now what? Well, is that really the reality? Or am I missing something? Is this more like the reality right here? Because maybe I don't just miss one trade. Maybe I missed 2 trades. Because when I did my trade plan, I did probability was based on taking every available trade. But I know I can't because I'm going to miss Mondays. or I'm going to miss the first part of the day on Tuesday because I take my kid to school, or whatever that is. So maybe this ends up being more of the reality. So now I've risked $1,000 starting at the beginning of the week to make $25. And then is that sustainable for my account? So ponder that for a moment with your trading and your trade plan and your strategy and all that stuff. And then when you start looking at your trades and you start making mistakes, you can see how stressful those mistakes can actually be if you understand that this is the reality to your trading. So in my videos, when you see that I start trading my P&L, or I get out of trades early, I move my stop to break even plus a couple dollars, and the trade hit the target and then goes back up and stops me out, that, like, internally, I know you might not hear it so much in the mic, but internally that gives me a lot of like angst, because I know that this is what I'm creating when that happens. I started with this at the beginning of the week, and as I do those things, I'm creating this scenario right here. You know, one more mistake and this last $25 is gone. And now I'm slowly bleeding to death in my account, and it's going to blow up. Not because I have a bad strategy, but because my trade plan is failing me. All right. So quick snapshot there. I think that's really critical for what I'm about to say next. And so that you can kind of understand what's in my brain when I'm trading and I am making mistakes, or I do get out break even plus a couple dollars. I don't see my full target hit. And I think in your own personal trading, putting something like this together, making it work in the relationship to your R to R, can drastically change your viewpoint and concept on your trades. All right, so a lot of times when we're doing our trading thing, you know, we're close to it, and especially if we're having some mental fogginess or our mental fitness is in decline at the moment for whatever the reason being, it's hard to see what's going on. And when you have a trading buddy, that can help you out. You know, if you're sitting there with your trading buddy and you guys trade together, and they can look over and be like, hey, what are you doing? Or you're talking to each other and they're like, hey, what are you doing? Like, that's outside your norm. That's not part of the plan. Like, why are you making those? And just make you think about what's actually happening, because you might not even realize it. Like, hey, why are you trading your P&L all the time? It's like, am I doing that? I don't think I'm doing that. Yeah, you're definitely doing that. But if you don't have a trading buddy to do that with, that can be kind of difficult. And here on the channel, all of you are my trading buddy. So like the comments that some of you leave, like I may not agree with the statements that you write, but those still spark thought, and that thought could lead to growth. You know, and for other comments, I might question them and like, oh, you know, Eric, are you trading your P&L? It looks like you're trading your P&L. I'm like, I'm not trading my P&L. Why did they say that? I don't think I'm trading my P&L. But then I keep hearing that same comment from others. Like, hey, are you trading your P&L? It looks like you're... It's like, am I trading my P&L? So it makes you think, and you're like, maybe I am trading my P&L. Let me look at that. Because what's obvious to all of you watching my videos might not be obvious to me because I'm too close to it. And same thing in your own trading. Like what might be obvious to others who might look in on your trading may not be obvious to you until it's too late. So please note, traders, like I'll never be offended by the comments that you write. If you're respectful and you put those, you know, your honest comments in there and your thoughts, I read all of them. I read them. I try to respond to them, or at least like them to let you know that I have read them, and I do appreciate them. So I do not get offended by comments. I may not agree with them in the moment, and they might eventually, as more people say the same thing, it might add up to something that actually helps me out, like it did this week. And the second thing is, you know, having all of you as my trading buddy and putting comments in and stuff. And again, I do appreciate it very much so. But also having this channel and being 100% transparent and honest with all of you, and not trying to fake that I'm like the best trader on YouTube or anything like that. That also helps me be accountable, you know. And when your comments call me out on stuff, that helps me even more be accountable. When you just trade in the basement of your house and nobody's watching you, and you have to hold yourself accountable because no one's going to ever see what you're doing or hear what you're saying, it's a lot harder. All right, so many of you have been commenting on my videos about my trading my P&L. You're trading your P&L, you're trading your P&L. Why are you trading your P&L? Are you trading your P&L? And then Zane called me out for flip-flopping on my comments. I didn't even realize I was doing it. And then in Zane's comment, basically says, hey, you're doing this, and like quotes me in my videos, and I'm like, what? So it was awesome though, because combined with what Zane says and my flip-flopping in my comments, and then others commenting on me trading my P&L, and a few other comments all focusing on mental fitness. And it's like, what am I do? Why am I doing these things? Why is this happening? What I'm seeing on the video, trading my P&L, is not why I'm failing in my trading. And I'm not really failing. My account is still good. But while I'm struggling and why I could be failing, trading my P&L is not doing that. My flip-flop comments are not doing that. All those are symptoms, traders. And when you find yourself doing that, they are symptoms of a bigger problem. So let me show you what my problem is and what you all help me discover. All right. So scaling ladders. Scaling ladders are important, traders. If you have a written thing down that says, when I get to this point, I'm going to scale up by whatever it is that you're doing, contracts, dollar amount, percentage, whatever that is that you need. It helps a lot to be able to visualize it, I think. So if I have a scaling ladder that I can visualize and say, when I get to this point, I can be at $300 risk reward. When I was down here, it was around $500 risk reward. Now I'm busted back down. So as my account grows, so does my risk reward of 500, or as my account shrinks, my risk reward shrinks. And this is what helps keep my account alive. If I'm risking $500 a trade and my account starts going the wrong direction and I keep on risking that same amount, I'm going to blow up quickly. But if I keep scaling down as my account goes down, then that allows my account to have more longevity, so I can figure out what's happening. Maybe it's just a cold market for my strategy, and I needed that, I had a bad week. I need to survive that bad week so I can get back on the good weeks. And scaling up and scaling down helps me with that. And then when there's really high probabilities, I can jump on some extra risk, if you will. Some people do it by percentage. If you do it by percentage, then it really helps your account survive. You almost never blow up, because it would take you like thousands of trades. Eventually you'd be down from like $100 to 95 to 80 risk, 50, 20. And then you're finding yourself like at 5, 450, 425, like, because it's percentage, it can last even a lot longer. So by having a scaling ladder, I think it can definitely help your account survive a lot longer. So if you don't have something like this, it might be something to think about. The other thing it does is, when I'm feeling FOMO, I can scroll down and say, you know what, if I just follow my plan and my scaling ladder, I should be able to make, 400 grand when I have taken however many trades it is. Whatever, I've got 1,000 trades in, I'll be able to have 400 grand in my account and I'll be good to go. So, and that kind of helps me stay focused and not have FOMO. But if my scaling ladder is wrong, then my whole trading could fall apart. Let me explain. So if you have an account that has $10,000 in it, and you risk $5 on a trade, and that $10,000 is just throwaway money, doesn't matter, you don't need it, it's just there, and you risk $5 on a trade, are you gonna worry about it? Are you gonna get out of a trade early because you're afraid you're gonna lose $5? Or are you going to get in, hit your profit target, or hit your stop, not even think twice, right? And you take a loss and you don't care. You're going to go back and just do the same exact thing again, because that's the strategy and the plan, and you're not even going to probably care about it because it's $5. But with a $10,000 account, if you put $5,000 on that trade, now how are you going to feel about it? You're about to lose half of your account if this trade goes against you. Are you just gonna be able to sit back and say, I'm good with that, I don't care, I don't really need that $10,000, it's $5 grand, so what, I do that twice, my account blows up, is what it is. Is that the attitude you're gonna have? Probably not. You're probably gonna be freaked out, paranoid, sweating, shaking, making bad decisions, and possibly, those bad decisions will lead to a blown up account, because you are freaking out about the risk. It was too much risk for your mental fitness based on your account size. That's simple, right? So that extra emotional level, that will degrade your mental fitness, and that could lead to bad decisions. And when you're making those bad decisions and getting out of trades early, you saw in the success rate exercise I did with you how your fear, because you had too much risk on the trade, affected your ability to see the trade through. Therefore, it affects your long-term outcome, because now you're affecting your success rate, which now at the end of the week, instead of making $175, you made $25. And then that exponentially continues to affect your mental fitness, degrade you, and leads to a blown up account. So when all of you are making your comments, I started asking myself, what am I doing? Why am I doing that? And the answer is, if I'm having a hard time sticking with my trade plan and my strategy, and I'm looking at my P&L, it's because I have too much risk on for my current mental fitness, whether it's sleeping, whether it's stress at home, whatever it is for you. If you're looking at your P&L, if you're hunting for subjective viewpoints and confirmation bias, if you're nervous, if you can't see through your plan and your strategy, maybe you have too much risk on the trade. You know, if you're risking $5, is it going to bother you compared to whatever you're risking right now? So, and that was my problem. So, and if you're in tune to it, what happens is you might be okay with risking $500 today. You don't get any sleep the next 2 days, and now that $500 is affecting you. And if you can recognize that that's affecting you, or that will affect you, then on those days where it's like, man, I've only had 3 hours sleep tonight, I'm only going to risk $50 per trade today. Not because I might make mistakes, but because my mental fitness is degraded, and that $500 will probably affect me. So anyway, I know it's a long video, traders. I hope that that helped some of you. It definitely helped me to see that stuff in my comments. You know, I'm not trading my P&L intentionally, but when my risk is too great for my mental fitness, you're right. I'm looking at my P&L, and I shouldn't be doing that. And the only way to stop doing that is to be able to have my risk align with my mental fitness based on my account size, so that I don't feel the urge to trade my P&L. And when I'm looking at it saying, this should be all right, I should do that, I should do this, and it's flip-floppy and all over the place, again, that's insecurity coming out. And when I'm feeling insecure, I need to identify why. And almost always for me, it goes back to I have too much risk on my trade for my mental fitness in that moment. So anyway, thank you all for your comments. Thank you all for helping me realize that I was trading too much size for my mental fitness currently, and that I needed to scale down. So thank you all for that long video, I know. Hope you all got something out of it, and I'll see you on the next trade.